exam will be, we will be looking at, the first thing we'll be looking at, which is what I said, liabilities. Liabilities is chapter 9. I will show you, I will point out a little bit of what my expectation will be. So liabilities is chapter 9, and then stockholders' equity. Stockholders' equity. Stockholders' equity is chapter 11. Chapter 11. And then statement of cash flow. Statement of cash flow. Statement of cash flows, that cash flows. That will be chapter 12. And then financial statement analysis, which is the core of this course, financial statement analysis. Financial statement analysis, that is chapter 13. There is nothing strange about the exams. If you have been following the lectures, reading your notes, following the PowerPoint, then you should be able to get 100% on these exams. There's nothing so special about these exams. So you don't look at it as something that is not doable. It's something you can get full credit on it. So that will be our focus on 4 chapters. I can make it all-round exam, that is from the first chapter, but that would be too much for you to study. Since we did quiz 1 and 2, we did quiz 1, cover the first few chapters. Quiz 2, we cover other chapters up to chapter 8. So logically, I will make the final to be these 4 chapters. Chapter 9, 11, 12, and 13. And then the exam will be, the first thing, the composition of the exam. The composition of the exams will be, we will have true-false question. That is, if a question is true, you check true. If it is false, you check false. And then we have multiple choice. Multiple choice, you will know that it's always 4 choices, and then you make your best choice. Your best choice is what should be the correct choice. So multiple choice questions. False questions. And then the last one will be problems. Problems. So most of my questions will come from the last chapter, like I mentioned last time. So very few questions will come from chapter 9, 11, and 12. Most of my, in fact, 50 or 60% of the question will come from chapter 13. Chapter 13 is actually the core of this program. Why you pass through this course is so that you'll be able to analyze financial statement. And you should be able to make an informed decision when you are given opportunity to make that decisions. And you have all the tools now, so you should be able to make that happen. That is why 60% of the questions will come from this chapter. Then the remaining 40 questions will come from 40 questions will come from chapter 9, 10, no, sorry, not 10, 11. 11 is stockholders equity. Chapter 12. So 40 questions from chapter 12 will be distributed evenly. So that means I will say maybe 12% of the question will come from chapter 9, 12% from chapter 11, and the remainder, which is 16%, will come from chapter 12, and then chapter 13, there will be about 60% of that questions. Any questions so far? If you have any question, you can ask, because this is generally review and preparing for the final exams. So you don't wait for me alone to continue to talk. If you have anything to contribute, you can contribute, so that we have a very good exit exams.
Professor, what is the number of questions in the exam?
The exam should be 100%, 100% question. So I'm looking at, I have all the questions, but I've not selected them yet. But I'm looking at probably between 25 and 30 questions. I'll give you with 3 hours, and with Thursday, Friday, Saturday, Sunday, you should be able to find time, sit down quietly, do the exams. And because you have 3-hour window, so you should be able to finish exam even in 2 hours or less, because a lot of it will be multiple choice, true, false questions. Except if I don't have, if I want to increase the question, I will let you know, but it should be between 20, 30 questions. So most questions will be theoretical, because we did a lot of theory from this chapter, from all these four chapters. There will be theoretical questions. So if you don't read the notes, there is nothing practical about it. If you don't read the notes, know what liability is, know those ratios we have done in each of those chapters, know some of the key elements of each of those chapters, then there is nothing practical about you doing well. So you have to understand those aspects of things. I will bring up those chapters again, chapter 9, 11, 12, 13, and we just quickly run through it and see those questions, those issues that I want you to focus on. So I will bring those chapters up again, and then let's look at them together. Any question? Okay, on the grades, I didn't have time to go through most of those things you've done. Most of you who did it late didn't have time, so I think this is a very logical week for us to sit down and do the grades. So by Thursday, you'll see what your grade should be, excluding the final exams. And we know we have the distribution of the final exams. Let me look at the papers. We have the distribution. Let me see. The university have a distribution. Who has the syllabus? I think it should be there. Okay. Okay. I know the total should be 300 points. 300 points. So whatever you get, divide by 300 points, multiply by 100 will give you percentage, what you got. And then the next thing you will do is, what will that be? If it is a 90, that will be A. If it is something between 80 and 89, that would be a B. And then C and D. I'm just trying to look at it myself. Call description.
Professor,
Yeah.
we have submitted everything on Moodle except for the first two assignments that we submitted to email. On that time, I think Moodle was not working. So can you find those assignments that we submitted through email, or should we post them on Moodle? The assignments that we submitted through email.
Yeah, if you recall, I told you that that time the model was not working. I was just coming in myself. So I said that now that the model is working, post it to the model so that I will be able to see all of them. But if I don't see anybody's assignment, definitely what we used to do and what I will do in my own case always is that I will shoot you either an email or in most cases WhatsApp. WhatsApp is faster. I will send you WhatsApp that I've not seen you assign this assignment. Because from what you see is that assignment, they all have grades. Those assignment I gave you, I didn't call it quiz. I'll make it 100 points for those assignments. That is what the university say we should do. So we have quiz 1, quiz 2. Quiz 1 will be 50 points, and quiz 2 will be 50 points. And all the assignments that have been given, all those assignments were given, I'll put all of them together, and that will be another 100 points for those assignments. So I will split it if I can't remember how many they are, everything. I used to say, okay, do this, do that. And then I say introduction and so forth. So I'm giving grades on all those ones. So each of them, I will give them points, a total of 100 points for the assignment. And then the quiz 1 is 50 plus 50 for quiz 2. That is another 100 points. So 100 points. And these final exams will be 100 points. So we have a total of 300 points. So we have a total of 300 points. Yes, so for example, if you have, I think 300 points a minimum, can somebody calculate if you have, say, 220 points? 220 points will be, how do we get that? 220 points divided by 300 multiplied by 100.
That will be 93%.
That would be
93%.
93.
Huh? 73%, if I'm sure.
He said 280. That's
I said 220.
220?
220.
220.
Okay, I thought you said.
Yes.
I thought you said 280.
This is the same thing you will do. Add all your points, divide by 300, multiply by 100. It gives me 73%. 73%. So, by your university policy, or according to your university policy, you need this point to pass. Anything below 73% you will not. So if you get a total of 210 or 219, that means you have not passed the course. 200, I don't think we should be in that range. I hope that nobody will be in that range. But if you get like anything 219 and below, you will not pass the course. For example, if you get 215, what will it be? 215 divided by 300 multiplied by 100, what will that be? Who knows?
That will be 83%.
71.6.
No? Why are you getting your own are you using a calculator or you are using your brain? Me, I don't use calculator. I use calculator myself.
That is 71.
Huh?
71.
71.
I think he heard 50, 250, but you said 250.
Why is it?
Oh,
I
I'm
said
I'm
215.
having a problem with my ears.
215, 215.
Okay,
Yes,
sorry, I
so
thought
it's
if you
215, so that will be
71? 71.6.
71. What of 210? What will 210 be? I just want to different scenarios so that you know as soon as you get a total of these numbers, you know where you will be.
70,
70.
that is 70.
Huh?
70.
70. Okay, you see, it's going down, down, down. So what you look at is that if you get 100, so supposing, okay, now I'm very sure by today, because I'm going to work on the grade today, by today, I will make your grade over 200, all over 200. That is excluding the final, that is 300. I want you to understand so that we will not receive too many WhatsApp or too many text messages here and there. So if now we have done quiz 1 and 2, if I did not grade your quiz, I will grade it today because I want to get a picture of it too. Then all assignment, if you don't miss any assignment, I will do all the assignment today. I will put everything in. So now we will have today, after today, we should have 200 points. If you get 200 points, then you are in the correct part. Then you will need a minimum of 120 points. No. You need a minimum of 20 points out of the final exams to pass. So if you get 100, that means you get 300 points. That means that is A. That is a good A. If you get 80 out of 100 for the final exam, that will be 280. If you get 70, that will be 270 you'll get, and so forth. So for the quiz 1 and 2 and the assignment, 200 points. So it depends on what you get. Then you'll be focusing. I want you to have that picture so that you know what you are, where you are. So that by the time you do the final exam, you say, okay, before I do the final, I am on this point. I have gotten 180. So maybe if I get 100 on the final exam, that will be 280. If I get 90, that will be 270 and so forth. So in that case, there is no hidden magic. I don't hide anything when I do those final grades. So you need to know how we work on those grades. Or I will work on it anyway. Maybe instructors, maybe they are different, but this is how I will do it. So that by the time the quiz 1, 2, and assignment goes in, you know, yes, that is where I should be. I should aim on this so that I will be able to make an A or a B. Any question about grades? Any question about grading? No question. Okay, let's look at the chapter 9 liabilities. Let's look at it. Let me see if I can download it. Chapter 19. Upload from chapter 9. Lecture PowerPoint. So that is reporting and interpreting liabilities. I know everybody must have read this. Everybody have prepared for this exam in such a way that we don't need to waste much time on it. So you should be able to define, measure, and report current liabilities. And in current liabilities, we have a lot of accounts that we should be focusing much on. So you have debt, equity. Those are in fact, the two things that we will be looking at is current liability, long-term liability, and equity. Equity is the stockholders we are looking at. Let's look at a question may be asked, the definition of short-term liabilities. Who can help us with that? If I ask you a question, I say true or false, short-term liability is an obligations that is payable at the end of balance sheet period. Is that correct or not? If I ask you such question, I say current liabilities is an obligations that the company is expected to pay off within the balance sheet period. Will that be true or false?
True.
Huh?
True.
I'm not hearing you. Are you not on speaker?
True.
Is it true?
Maybe I have a problem with my mic since yesterday, so I think it is true.
Wow. Okay. Okay, but that question is true or false?
True.
Huh?
Yes, true.
True? Who says false?
Sir, can you repeat your question, please?
Okay, I will repeat. Current liabilities are obligations or debt that is to be repaid by the company by the end of a balance sheet period.
My answer is true also.
Huh?
In my opinion, it's false, but I'm not sure.
You are perfectly correct. It is false. It is false. It's an obligation to be repaid within 12 months or by the end of the cycle, the company cycle. At the end of, before the end of 12 months or within 12 months. So if I say as a balance sheet, that means it is false. Did I make myself clear?
So you mean it's 12 months from the liability time?
Yeah, from the time the company, for example, pay for raw material, from the time the company pay for raw material within 12 months, if it is current liability, any obligations that is to be paid, repaid within 12 months is what we call current liabilities. Then if I say this is an obligation in which the company is expected to pay at the end of the balance sheet period, that balance sheet period make it false. So those are the type of questions, you see? Those are the type of questions. So you have to really read your notes. It's not something very practical that you say, oh, I must be so practical to understand what is going on. At the end of balance sheet period, you make it false. But if I remove that, I say at the end of, or within 1 year, or at the end of 12 months, or within the company operating cycle. Operating cycle of the company may be 12 months, it may be less than 12 months. So such obligations is what we call current liabilities. Any question about that? So that is a good question. So you know what current liabilities are. So we should know what current liabilities are. There are good examples there that have been given to us. And you also, if you look at the balance sheet, you should be able to get that too. Current liabilities. How is account payable created? Who can answer that question? How is account payable created? How is account payable created? Nobody have an answer, right? Or what? How is account payable created? How do we create account? How is account payable created by the company? Maybe as at yesterday, you look at a company's balance sheet. Under current liability, there was no account payable. But all of a sudden, as at today, we are checking the company's balance sheet under liabilities, and then we see account payable. Then the question is, how did the account payable come about? Anybody with an answer?
It's when the company purchase goods or services to use in operation activities.
When the
sorry again.
huh?
What did you say, Professor?
No, I didn't understand. I didn't hear you clearly. You see, you said there is problem with your speaker. Maybe I don't know. How is account payable created? I think you were answering the question, and you were in the right direction. The way I look at it.
Can you hear me now clearly?
Yes, very, very clear.
Okay, it's when the company buy goods or services to use in its operating activities, and they buy it on credit.
Buy on credit. You have added what will make it true. When the company purchase raw materials or any product on credit and is to be paid within 12 months is account payable. Account payable. What of, who can talk about deferred revenues? Deferred, how is deferred revenue created? So we have not, with a lot of us who have not read, we've been able to read most of this. I was thinking we all should read and come back and discuss this. I can't give you everything if you don't read the notes. If you don't understand the lectures, we did the lectures last week or last few weeks, and then we have reviewed, and here we are. We have the final exam coming up soon. So,
Professor,
yes,
Okay.
somebody's talking.
yes, I think that deferred revenues are, it talks about the revenues that the organization has received prior to providing the services or products to their customer.
That the revenue that the company has received.
Yes, before providing the services or
Very good. Before providing the product or services. So if a company, yes, for example, I know it's always happening. Let's use the example that all of us are affected. Maybe a few days from now, you hear Apple, has Apple come up with iPhone 12? Yes. What of iPhone 13? Not yet. So tomorrow you may hear the iPhone is Apple is coming up with iPhone 13, and then you can make upfront payment so that you can secure your own iPhone 13. You pay Apple. We say iPhone 13 is going to be $1,000. Then you say, okay, I learned that that iPhone 13 is going to be one of the best. I know they always say that. Then you pay. Tell Apple, take your $1,000 as soon as you produce iPhone 13, send it to me. Under GAAP, generally acceptable accounting principles, we cannot recognize that income. The company will not recognize that income because the goods have not been passed. The ownership of the good have not been passed to you who have paid for the iPhone 13. So before then there will be what you will do the transaction entries. And what will it be? We will now do what we call a T account. We debit cash because 1,000, we debit cash 1,000, and then we credit liability account 1,000, and that creates a part revenue. And also we have another current liability that I want you to take note. Long-term debt repayments. Long-term debt repayment. Long-term debt is going to be repaid within 12 months. And you know, it may be 10-year loan. And any current one that is going to be, that is the repayment that is going to be repaid within that year is current. It will now move from long-term debt to current liabilities, because within 1 year you have the company will have to pay that. So those are some of the issues I want you to take note. We'll keep going, but I will be able to take, let's take 10 minutes because I want to do one or two things, and then 10 minutes we come back and continue with this section review, and then we move. I hope you are writing notes on those things that we are discussing, because those are the things we should be expecting also. So we take 10 minutes and come back after 10 minutes. I am back. Hmm. Everybody available? We are still on break.
We're back, Professor.
Oh, okay, okay, all right. Okay, all right. All right, let's continue with the review. I think we talked much about current liabilities, and we know what current liability is now. I will continue to throw some questions that you should be expecting in the exam. So if you see any questions, we have to discuss it when we get to any slides that I feel we should discuss. I still have some questions on this chapter 9. All right, so supposing you receive cash from customers that may result in current, if you receive cash from customer, is this strictly speaking that it will always result in current liabilities? If you receive cash from customer, it may result in current liability, true or false? If you receive cash from customer, will it always result in current liabilities?
No.
So I'm putting that question the right way around again. So if you receive cash from customers for goods not delivered, so that will result to current liabilities. If you receive goods from customers,
I think so, Professor.
yes. If you receive goods from
I think
customers and
that's true.
okay, all right. Let's. I'll look at accrued tax payable. Also, we know anything accrued means they have accrued those liabilities, but they are not yet been paid. That is why we call it accrual. Okay, I will be rushing. I know you guys supposed to have covered almost everything here. Payroll taxes also is always at times it will be accrual. Deferred revenue, we talk about that. Now you know how deferred revenues are created. Okay. All right. Let me see. Okay.
Excuse me, Professor.
Yeah.
The question that you asked us, like, is it false or true? The answer.
Which one?
The last one. The one that you said if we
If
receive.
customer receive.
Yes.
If you receive customer pay cash or the company receive cash from customers, yeah, it may result in current liability. That is true because
yes,
the customer may be paying.
It may result, but not always, right?
No, not strictly speaking. But if I say it may, then that means it is true. So this is a matter of English language now. But if I say strictly speaking, it must result in current liabilities. That is false. Because if the customer is paying for a product and the product has been delivered to the customer, so that will not result in current liabilities. Okay? Any more questions on that?
It's clear, Professor.
Okay. Let's see if we get something else. Is there any question on this chapter that I need to talk about that we did not talk about? We talk about note payable, loan payable, or long-term debt payable, anyone that falls within 12 months of repayment that become current liabilities. We talk about, and let me see. I'm not going to ask question on journal entry, even though it's just good to have an idea. of journal entry, how it is created. It's like, for example, a customer paying for goods not delivered. For you to create a journal entry, that means we are debiting cash one for that amount, and we credit and open a current liability for that account. That is how it is created, but I don't think I will ask you any question on on journal entries. So there will be no question on journal entries, even though you need to know when a transaction takes place, how will it be treated? So we need to know. But there is no question on journal entry. By the time you do accounting proper, yeah, you should be able to work on that. Also, you should know the definition of working capital. How do you calculate working capital? It's very, very straightforward. Current assets less current liabilities, working capital. You should be able to also know there is about two ratios there. Who can mention those ratios? There are two ratios, liquidity ratios that we need to know. You will need to know how to calculate those ratios. Who can tell us those entries that we need to know about ratios?
Is that current assets over current liabilities? One of
Current assets
them. Divided by
current
current liabilities.
Huh? Current asset all over current liability is what?
One of the working capital ratios.
Have you done? We did current ratio, right? Correct.
Yes, yes.
We did the current ratio. You should be able to know how to calculate current ratio. Current ratio is always current asset, the current asset divided by current liabilities. For example, if the total current asset is 50,000, and the total current liabilities is let's use a simple example, is 25,000, and then you are asked what is current ratio. That would be 50,000 divided by 25,000. So in this case, what would the ratio be? What would be the answers to this?
Sorry, Professor, can you repeat?
I mean, for example, you check the company's balance sheet and you realize that the total current asset is 50,000. Current asset is 50,000. And then you realize also that the total current liability is 25,000. Then the question is, what is the current ratio of this company? What is the current ratio of the company?
It's 2.
It's 2. Either you say it's 2 or it's 2 to 1. Either 2 or 2 to 1. You are correct. Because if you divide 50,000 by 25, that will be 2 all over 1. So it's expressed as 2 to 1, 2 double dot 1. Or you just say 2. That still makes sense. You will still get it right. But assuming now, in this very company, we know that cash, that is cash, liquid cash, out of the 50,000, 20,000 is liquid cash. Inventory here is, say, 5,000. Then we ask you, what is the acid test ratio? So what will it be? What is the acid test ratio? Or maybe if you don't call it acid test ratio, we call it quick ratio. What is the quick ratio? We know now. We know we have refreshed our memory on current ratio, and now the question is, what is quick ratio? The company's total current asset is 50,000. Total current liability is 25,000.
Okay.
And in the balance sheet, let me finish. In the balance sheet, I'm not repeating what I said because nobody answered yet. In the balance sheet, we realize that cash is 20,000. And then we also realize that inventory is 5,000 out of this 50,000. Cash is 20,000, 5,000 for inventory. And then I'm asking, what is quick ratio of this company?
I think we minus the inventory 5K from the current asset and divide it by current liability.
So what will it be?
45K
so that everybody will know.
over 45K, 45,000 over 25,000.
Very good. So in this case, it will be 1.8, correct? So I did mine is 1.8. Am I correct or wrong?
It's correct.
Correct. Okay. Okay. You can see that if we go down this line, if repair, will not wait until, if it is a manufacturing company, you know, they have to convert the inventory to semi-product, then to final product, and then sell. But if it is, we want it now, we want today. So then the ratio will now be what we call the quick ratio or acid test ratio. That is a test that will tell you that if you stand up today and tell the company, pay all your current liability now, how will it be possible? It means more than one means yes, it's possible they can do it. Now 1.8 means they can repay and still have 0.8 left out of the whole working capital, out of the whole current assets. So quick ratio really give us a good indication of the liquidity, the strict liquidity of the company. What if we talk about cash ratio? Cash ratio, what will it be? Who knows? Cash ratio or near investment ratio, yeah?
Cash ratio is going to be only cash, which is 20K over 25K.
Yes. All over 25. So
25.
that would be what? What would it be?
It's
What would it
0.8.
0.8. You see the 0.8. Yeah, you got it. Okay, let me see. I always like to, when we are working on this, we have to take it to 2 places of decimal. 2 places of decimal, that means you first of all count 2 places of decimal, and then the 3rd place of decimal, if it is more than 5, more than half of 10, you round it up. If it is less than, you round down. Did we understand the meaning of rounding up and down? If anybody don't understand, you tell me, I will explain it again. But that is the aspect of algebra which we apply to what we are doing. Any questions so far? Let's see if we have other questions. So we should be able to understand the ratio very well. We should be able to understand ratio very well. And then also another component of this section is long-term liabilities. What are long-term liabilities? What are long-term liabilities? Okay, maybe we know. Maybe we know that, yes, these are some of the questions that will appear on true or false. So at times we will put the, just like what we did in when we are looking at long-term and short-term current liabilities. So some of these questions will come and frame and make sure you understand. Yes.
Long-term liabilities are the debts that the organization has to pay to its creditors in long term.
In long term, what do you mean by long term? You know, I'm a layman. I don't. So you have to pieces it and bring it down to so that somebody will say, yeah, this is a student, he has passed through this accounting and finance course. What do you mean by long term?
More than 12 months.
Huh?
More than 12 months.
More than 12 months, strictly. It cannot be equal to 12 months. 12 months and below is current liability. More than 12 months is long-term liabilities. So those are those issues. Let me see. Let me see if there is any other thing that we need to know here. But apart from that, generally, you read generally, and that will help a lot. Reading generally to get what is involved. The other time we talk about present value, and now you should be able to know how to calculate present value. You don't need to use calculators. The other time I wrote a formula, somebody said, oh, that formula is old. Well, anyhow you want to do it, if you want to calculate by mere calculating, or you want to use financial calculator if you have one, yeah. So you need to know how to calculate present value. Assume that you need to make a 1,000 cash payment in 3 years at an interest rate of 10%. How much would you need to deposit today? So that is what we call present value. What you deposit today to make 1,000 in 3 years. So the 1,000 in 3 years become a future value, while what we are going to look for become the present value. We know that future value FV will be equal to present value multiplied by 1 plus the rate to the power of years or period. That is, in this case, we have 3 there, number of years. So we are looking for present value, so we should be able to use this. If you are using my own formula, which is the standard formula for everybody, then you should be able to now make present value the subject. That is algebra. To make present value the subject, I will know that present value will be equals to future value divided by 1 plus rate to the power of the years. That is 3. So now you've put in those values there, you still arrive at the correct value. So now we know future value there is 1,000. Future value is 1,000. So if we divide 1,000 by 1 plus the rate is 10%. 10% is 0.1 all to power 3. So 1,000, it means that 1,000 divided by 1.1 to power 3. And we know what to expand 1.1 to power 3 means 1.1 multiplied by 1.1 multiplied by 1.1 3 times. And then use that number, 1,000 divided by that number should give you 751.31. So that means the present value today will be 751.31. Any question on how to calculate present value? If you have this question coming into your exams, any questions you have how to calculate the present value? Any question?
No, Professor.
Mm-hmm.
Next.
Yeah. No question?
Yeah. No question.
Okay.
Next.
Yeah? Mm-hmm. Go ahead. Oh, no question. Okay, I thought you said you have questions. Okay.
No, Professor.
Okay. So same thing, calculating annuity is the same method we are going to use. Most of these things can be done by means of using calculators. So if you either use the formula, if you cannot use the financial calculator. So I don't expect you to use any other means, because if you are doing exams, I'll give you something simple like that to calculate the present value. I don't question on ethics. Question on this. Okay, we have explained that. Okay. Equity of, okay, so that would be all for this section, this chapter 9 liabilities. But make sure you read through for any general multiple choice question that will come under this chapter. Read through. So we'll go through to chapter 11. Yeah, chapter 11. Stockholders' equity. We'll go through chapter 11, so I'll close this one. Chapter 11 is true. Okay, this is stockholders' equity. Stockholders' equity. Yes, stockholders' equity, here you have to understand how the account is also created. If somebody can tell us in a nutshell how we come about stockholders' equity, what are the accounts under stockholders' equity? Anybody? What are the accounts? Okay, the first one we have is the common stock. Common stock that had been issued and fully paid will be one of the items. And then we have what we call retained earnings. Retained earnings will be another item we have there. So that will give us what we call the total stockholders' equity. Retained earnings, that is earnings that had not been appropriated. Because after the net profit, what we have is the appropriation. Then dividend is this much declared, and this is much paid. So that affects our stockholders' equity. So we need to know what stockholders' equity is and the implication of ownership. Corporation enjoy continuous existence separate apart from its owners So for a corporation, they own the asset, incur liabilities, sue others, and be sued. So we know what a legal entity, a corporation is. And then we should know the implication of being a stockholder. Who can remind us of those implications of being a stockholder? What is the benefit of a stockholder? Maybe we go to the next slide so that we know what's there. Benefit is here. Huh?
Enjoy dividend.
Yeah. Yes. Number one is that they have share ownership of the company, right?
Yes.
Okay. We have it there is number one, they have voice in management because they are stockholders. It's from the stockholders they appoint directors to oversee the entire operation company. From those directors that come from the stockholders themselves, people appointed from the stockholders list, they form the board of directors, and from there management is they can now also from there appoint management to manage the corporations. So they have voice in management. They have voice in management, dividends, they have right to dividends. And then they are the residual claim, proportion share of the distribution of the remaining asset upon the liquidation of the company. So they are residual claim. But I will ask this question. How are they ranked between preferential shareholders and stockholders? Who come first?
Preferential stockholders come first.
Huh?
Preferential stockholders come first.
Preferential share come first. So not until preferential shareholders is being paid dividends or is being dissatisfied in terms of liquidation, they will come first. They rank number one, or they rank higher than the stockholders themselves. So for stockholders, they enjoy the autonomy, benefit of owning a proportional share of the company, depending on how much they contribute to the existence of the company. And then we know the difference between authorized, issues, and outstanding. I think we explained that in detail when we had this class. What is authorized? Who can tell us what authorized shares? What is the meaning of authorized? If I say this company authorized share is 5 million, what do I mean?
I think, Professor, it's the numbers of shares that the organization can issue to shareholders.
The number of shares that they did what? Huh?
Sorry, Professor?
You were saying something, but I did not hear you clearly. You said the number of
It's the number of
what?
it's the number of shares that the organization is allowed to issue to shareholders.
Oh, you got it. You got it. That is the total number of shares under legally a company is authorized to issue. They are authorized to issue 5 million. They are authorized. But how many shares did they issue? They are authorized to issue 5 million, but they issue 3 million. So 3 million, if 3 million is fully paid, that is the share standing. 3 million is fully paid. So we have to know the difference between authorized issue and outstanding shares. So you can see the whole of this circle, the whole of this circle is authorized share capital of the company. Number of shares is the maximum. They can't go beyond that maximum. Otherwise, they have to go back for overall assessment and approval obtained. But they can't go more than that maximum. And within this authorized, they have outstanding share owned by the stockholders. Outstanding shares, like the example I gave. And then what we call treasury shares. You can tell us what treasury shares mean. You can tell us what it means.
I believe.
What do we mean by treasury shares? Huh?
I believe these are the shares that the company buys after they're issued. The company itself buys the shares.
Why did they buy them? Why did they buy them?
It can be due to different reasons. One can be maybe the price per share has gone down and they might want to increase that. And maybe there are no buyers and they buy it.
Oh, that's very good. That may be they want to stabilize the market of their share. If the share is sliding downward, they may want to repurchase. There may be so many other reasons why they want to repurchase their shares. But key issue in most cases will be probably they want to stabilize the market. And if their share price is going down, that means there are too many of those shares in the market. I know you guys are currently doing economics. 2 shares are in the market. Very few people are pursuing those shares. So that would definitely lead to lower prices of those shares. The prices will start coming down because there are too many shares, but very few people want to purchase those shares. So the price definitely will slide downward, all things being equal. The prices of those shares will start coming down. So what do we do? So they will have to do what we call, in economic, we call it, they have to create what we call artificial scarcity. Artificial scarcity. That is a cost scarcity of their shares to happen. How do they do that? They have 10,000 shares in the market, maybe only 7,000 demand for it. So they have excess. That excess will cause the market to slide. So what do? They can mop up that excess, buy the 3,000 or even buy more. 7,000 shares, people can get that. But they can buy even up to 4,000 of those shares. So in that case, only 6,000 shares are available. So that will stabilize the market. And then people will say, oh, I need more shares, but I can't have it in the market. So that will prop up the market. That will prop up the market price for those shares. So at any given point in time, they can now sell back those shares in the market, or they can just use it to pay other form of payment to the creditors or to staff or to directors. Okay, so that's good. Then we did a number of ratios. For example, one of the key ratios we learn about the shares is EPS, earning per share, which is equals to net income. So if you now look at the company's income statement, you will be able to see net income. Who cannot pick net income of a company from their own income statement? Or what is the net income of a company? Who can answer that question so that I will be comfortable that you'll be able to, if I give you an income statement and balance sheet of a company, you'll be able to calculate earning per share because you have seen There you will get the net income from the income statement, and then the number of shares. You will get that from the authorized and fully paid under the stockholders' equity of the balance sheet. You can tell us what the net income is so that I know you'll be comfortable of picking that number when you are computing.
Professor.
Yes?
Professor, net income is the income after tax.
What?
The income after tax.
The income, yeah, very
tax.
good. We will arrive at income before tax, before interest, before extraordinary items. So now from that income, we will either add or subtract interest. Why should we add or subtract interest? Who can tell us why?
Because interest is, yes, we are subtracting interest from the income before interest because it's an expense. It is part of the cost of capital.
Very good. But you know, I asked two-way question. I said, we will either add or subtract interest. You have answered the we will subtract because it's an expense. That is interest paid on borrowed capital or borrowed funds. Okay, supposing we don't have that and we just, you see in their income statement, they are adding interest. What does that mean?
It means there is other income from other investments that comes in the form of interest.
Income from their short-term investment. Like I said, when we were doing these lectures, I said investment may not be the core business of this particular company. As if the company is like Apple or manufacturing company. Their core business is not investment. But if they have excess cash to invest, they don't want to keep that cash in the drawer. So, okay, we have 5 million. What do we do with it? Should we just put it in the drawer until when we need the money we use? No. A good financial manager, what will it do? It will say, okay, let's look for an outlet where we can invest this money in the stock market and earn interest. So that interest income is what will be added after the income had been agreed upon. This is the income. We add that income interest because it is an income derived from investment, short-term investment. And then we subtract interest from the same income statement because the company borrowed money and they have to pay interest. And then we now adjust for extraordinary items gain on fixed assets. So we remember what we call extraordinary item gain or loss. So as soon as we've done that, then we are now ready to do the tax. What is the company's tax? The company tax is 35% or 45%, depending on what the government agreed to be their tax bracket. Here in the United States, they always define what the tax bracket should be for each of the companies. Small companies probably between 15 and 25%. Big companies, some of them pay 35, 45, or even 55%. Currently now, the Senate have decided that every big company must have their fair share of tax to pay. So I don't think those big companies that make a lot of money, they may pay tax as high as 55 to 65 to 70% of their net income after those adjustments we have just discussed. So then that is where you arrive at net income. So as soon as you see the net income is the bottom line, bottom line. We call it bottom line because that is the end. From immediately after net income, the next thing will be what we call appropriation. You appropriate. So, okay, this should be for dividend. This should be for retained earnings. This is for this. That is appropriation after net income. So if we are calculating earning per share, we should be now looking at net income. Practically, I now know everybody should know what net income is. How to pick net income from income statement. Don't go and pick gross income. That is the first level of income statement. The first level is income statement, and then income before interest tax will be the intermediate level in the middle. So if you pick gross income, for example, if I give you a question like this, I say gross income is this, net income is this, or income before interest and tax is this, then net income is this. You don't pick gross income, you pick the net income because that is the appropriate number to use. Then all over the weighted average number of common share outstanding. I will not want you to calculate that. I will give you that weighted average number of shares. And one thing I want you to know about ratio, any ratio that involves using an item from the balance sheet as the denominator as the balance sheet, from the balance sheet, you will always see average. I told you that. So if I told you to do a calculation that involves a balance sheet item, you should know that at the beginning of the balance sheet, at the beginning January, you pick the numbers of that very items. For example, inventory, at the beginning of the balance sheet, you pick the numbers. At the end of the balance sheet, as at 31st December, you pick the inventory again, add it up, divide by 2 before you. So anything that involves balance sheet item as a denominator, you must find average. You don't just pick any one, because if you pick at the beginning, you are wrong. You pick at the end, you put the 2 together, divide by 2, then you should be very much right. Then we talk about the characteristics of common stock and reported stockholder. That is another thing that you should take note of, the characteristics. That is the characteristics. Not one of it is that they have the voting right. They can vote. Even if you can even vote in absentia. Even you are not there, at least you can vote by proxy. Proxy means you are not there. You just send your vote because you are going to vote for new directors, vote for new items, vote for things to come in, vote for new items for the company, or new directive, new management decisions, and so forth. So you can send by proxy. You don't need to be there. So that is a very, very powerful and key characteristics of common stock. And behold, if you have 51% of the common stock of Apple, then you are virtually the owner of Apple, because you can influence a lot of things to happen. If you have 51% in voting, 51, majority carries the vote. So 51%, you have more. That means you are in control of that company. So voting right is very, very important. The next one is a share in the profit. That is what we call the dividends. The share in the profit. When the company now finalize the income statement, after finalizing the income statement, yeah, it's okay. The board now will decide based on the company's policy, of course, and decided that 5% or 10% of the net income is for dividend. They will calculate that. That means that is what they're going to distribute to all stockholders. That is another thing. So if you recall last time, depending on your objective, why you are investing in this stock. If you want a company that pay a lot of dividend because you want to take that as part of your income, then you'll be looking for companies with good dividend payment policy. Dividend payment policy. So you look for those companies. So because that is a key aspect of owning a stock. Then the final one is a board, election of board. Like I said, you vote for the board members, and when you vote the board members on your behalf will now appoint management to manage the association. So it's good to know the common stock, what the common stock, the characteristics of common stock. Okay, let's take another 10 minutes and come back and continue. Another maybe 10, this time 10, 5, 10, 15. Let's take 15 minutes and come back and finish the other, this chapter and the other 2 chapters, and then we're done for the day. All right, I'm way back. Yes, let's finish this stockholders equity. I'll pose a question so that all of us can try that and try that out, because that is the very questions that I think something like that, to be able to calculate the increase in stockholders equity. I will ask, supposing a stock is being sold at par and the value is 5,000. The stock is being sold at par, issued and paid 5,000, and declared dividends 10,000, paid cash dividend also 7,500. Declared dividend, let's say we sold stock on par, so stock at par value is $5,000. So this is new stock sold, 5,000, and the company declared dividend. Everybody should be writing it down because you are going to calculate for me. Declared dividend, and they declared dividend 10,000, and paid dividend 7,500. Then the question is, what is the increase in stock, in stock account? What is the increase in stock account? I want everybody to look like likely questions that will come in your exam. It may not be exactly that. Question about stock. Par value issued is 5,000. Declared dividend $10,000. Paid dividend 7,000. What is the increase in stock account? Who have an answer to that?
Professor, what is the 5,000 again?
Who have an answer? Huh?
What is the 5,000
I should
again?
repeat?
What is it? Yes, please.
The company sold common stock $5,000 per value, $5,000. So that is a new common stock that have been sold 5,000, and then declared dividend, cash dividend $10,000, and then paid the cash dividend 7,500. Then the question is, what is the increase in stock accounts? Who has an answer to that? How do we get it? Nobody?
Professor, let me try.
Okay, go ahead.
Since the stock is at par, that means they've realized a stock value of $5,000. Then the dividend declared and the dividend paid. So the difference between the dividend declared and the dividend paid is 7,500. So the difference is 10,000 minus 7,500, which is the increase is 2,500.
You tried, you're almost there. You ignore the fact that the 5,000 is new issue. So that is an increase. There is an increase of 5,000. And in addition to that increase of 5,000, they declared dividend of 10,000. Okay, so we still have another common stock dividend of 2,500 that was not paid. So increase in stock dividend will be 7,500.
Okay.
Did that make myself clear?
Yes.
Because the new issue is 5,000, but because cash dividend was declared 10,000. If it were exactly 10,000 that was paid out as dividend, then the increase in stock account would be just 5,000.
Okay.
I want you to see the two issues here. If I bring a question and then I say dividend declared was cash dividend declared 10,000, then cash dividend paid 10,000, issue 5,000. So the increase in stock account would be just 5,000. If I said cash dividend declared 10,000 and 2,000 cash dividend paid, so the difference not paid is 8,000. You add that to the new stock that have been increased by 5,000. 5,000 plus 8,000, that means the stock account should be reading 13,000. Did I make myself clear?
Yes, sir.
Okay, so those are the different scenarios that I will bring into the exams. So it's good for you to know how the stock transaction is being recorded and done. If the company is having, he has issued already 20,000 stock. But this time they now increase because maybe the share capital is still there, and the probably the authorized is 25,000. They have already issued 20,000 and fully paid. So if they want to increase their stock, they can't increase it more than 5,000. So that 5,000 become the increase in stock. And if cash dividend declared and paid the same amount, so the increase in stock account will now be 5,000. Increase in stock account, because the new stock account will now be 25,000. So the increase in stock now will be that 5,000. But if they declare cash dividends of 10,000 and only 3,000 was paid, so the increase in cash dividend will be 5,000 plus 7,000. That would be 12,000. 5,000 plus 7,000 will be 12,000. All right, so everything there, any other thing there, that is the problem you should be looking at in our that aspect, just on different scenarios, just like I've explained. So those are that is the type of calculation you should be expecting there. Every other thing, read the theory to understand what the stock is, what is common stock, what is preferential stock, and then see how it is calculated. The characteristics of common stock is very important, because that will also be your it will be your true, false, and multiple choice questions. So that will be all for stockholders' equity. I will now quickly run through statement of cash flows. Statement of cash flow. Statement of cash flow, we say, is based on 3 activities. Do we still remember all the 3 activities? What are those 3 activities?
Yes.
What are those 3 activities? Huh?
I said, yes, we still remember, sir.
What are they?
Number one is operating activities, cash flow
Very
from
good.
investing activities, and cash flow from financing. So we have financing activities.
And financing activities. Okay.
Yes.
And another issue that we want us to remember again, we said that cash flow from operating activities, there are two methods in which we can be able to compute the cash flow from operating activities. Which are the two methods and which one is used mostly by the companies?
I believe it's direct and indirect.
Yeah, let the lady talk. Let the lady talk. Yes.
Okay.
I believe it's direct and indirect.
Huh?
Direct and indirect.
Very good.
Method.
Direct. Yeah. Uh-huh.
And usually companies use indirect method.
Very good. Company use indirect method. So if you expect questions like that to come, throw in your multiple choice and true false. Definitely they will come. Cash flow is very straightforward. What do we expect? I'm not going to run through the slides. Okay. Number one, cash flow is based on those activities: operating activities, investing activities, financing activities. And if we are to prepare cash flow on operating activities, we have those two key methods. Two key methods. The first method is the direct method, and then the second one is indirect method. Like I said, 99.9% of company, or 99.5% of company use indirect methods. They use indirect method because from there, they will know the actual cash issue and segregate cash, what is not cash, when they are dealing with income statement. That is why indirect method start from the net income. And from the net income, they will add items that does not involve movement of cash. What is the major typical example of item that does not involve movement of cash that it should be added back to net income?
Is it the depreciation?
Very good. Depreciation. What is depreciation? Who again can answer that question? What is depreciation?
I think it's for the equipment used.
Yes, making provisions.
Yes.
For
yeah.
Very good. They are all correct. They are all correct. Making provisions for depletion of fixed assets. You are just making provision. So we call it depreciation, but in real terms, it's just a mere book entry. Book entry. You subtract it from income statement, we call it an expense. No cash was paid out. Book entry. So when we are preparing cash flow from the indirect methods, we have to add it back to net income. That is one of the key adjustments. Any items that does not involve movement of cash, that in income statement, we have to add it back or subtract it. But in this case, because we subtracted it and call it an expense, when we were treating income statement, we have to add it back when we are preparing cash flow. So that is number one. Huh?
Yes.
Oh, very good. Are you asking a question or you are agreeing with me?
I'm agreeing with you, sir.
Thank you very much. Okay, so that is the first thing. The next thing is we also adjust for what we call extraordinary items like gain or
loss on disposal
sales of assets, on disposal of assets. Very good. So in that case, when we are preparing in method, we will, if it were gain, what happened to income statement if we have gain of disposal of fixed asset? Income statement, what was the income statement adjustment?
Yes, if it's a gain, we list it.
Yeah,
we
list it on
minus
the cash flow. Yes, very good. We list it on cash flow because we added it on when we were doing our income statement or income statement, the company will add the gain. So now when they are now doing cash flow, they will subtract because they added it to inflate. That has increased the income statement by that much. So now when we are doing the cash flow using the indirect method, they will subtract. But if it is a loss, because for a loss of a disposal of assets, we are subtracting it from income statement.
Yes.
And in most cases, this is actual loss or actual gain. But why are we doing this adjustment? Because if we don't do that adjustment, that will lead to what we call double accounting, because those gain or loss have been taken care of when we are doing cash flow on investment activities. So that is why we are doing those adjustments. Otherwise, that would be what we call double accounting. So then the final thing is any assets that were involved in the operations, like inventory, for example, is part of operating items, assets. So we will now look at the end, the beginning and the end. The difference, if it is plus, we will subtract. That means we have paid for an asset. If it is minus, if it is less, that means we have sold. So we add that. And then we arrive at what we call net operating cash flow, or operating cash flow from, or cash flow from operating activities. Cash flow from operating activities. But that is not, now using the indirect method, we have been able to get cash flow from operating activities. So how do we get cash flow for the actual cash flow for the whole companies? How do we get the net cash flow from the entire company? Do we end with cash flow from operating activities?
No. No.
So what do we do?
Yes, it's a summation of.
So how do we get?
We sum up the net cash flows from operating activities plus the net cash flows from investing activities and that of the financing. The three of them.
Very good, very good. That is, you can see, it's very easy. Now we have done the adjustment. We got cash flow from operating activities, net. We got that. So the next thing is for us to move forward to examine cash flow from investing activities. Investing activities is very basic. What are the outflows? Do we buy purchase of equipment is outflow? So that would be minus. So supposing we bought the equipment for 50,000, that is minus 50,000 to our cash flow because money was paid out to acquire that investment. Okay. So also supposing we sold and we sold equipment for say 30,000. So now by the time we net this become minus 20,000. So if that is the only activities we have under investment, under investing activities, then we have minus 20,000. Then we move over to financing. Financing, what do we do? What do we consider to be able to prepare financing and cash flow and financing activities? Somebody else. I know we have a lot of students, more than 15 students. Somebody else should help us. What do we do to prepare cash flow for financing activities? Because now we have gotten cash flow from operating, now plus or minus cash flow from investing, I, plus or minus cash flow from financing. How do we get cash flow from financing activities for this company? Who can help us? Who can help us out? Only those who have not spoken should say something. Who can tell us? Who can help us?
Okay. All right, sir. How to get cash flow from financing? One, we look at the equity stock, the equity and the stock equity side of the balance sheet. Then we now collect all the issue shares. The inflow is the share issued, the amount of money received from shares or issued of shares, then and debentures. We also look at the interest, the cost of financing, also part of it in that account. Then we also look at what we have paid, the amount paid to offset the cash payment made. That is the outflow, is the cash issued out to
Okay, I will help you. I will help you out. You started very well. You started with stock. That's good. New issue capital. If the company issue, like the one example we gave, the company issue new capital of $5,000. So inflow will be 5,000 plus 5,000 under financing. Under financing will be plus 5,000 because that was a new issue. Cash was given. So that means the company obtained cash, they sell the shares and obtain cash. So cash is increased 5,000. So plus 5,000 is financing under stock. So, but we have other thing. One other thing that the last speaker added that is not, we don't want it to be double accounting, is cost of financing. Recall that in income statement, do we pay for interest? We pay interest expense.
the interest received.
Because we pay,
Interest received.
Yeah.
Yes, you have
Somebody should help us.
Interest paid and interest received. Then
Very
interest
good. So interest, let me just clear this. Interest received is on short-term investment. So we will add it to they will add it definitely. The company added to on the loan that was issued to the company. They took a loan. Interest is not going to be, we don't account it under financing. We account it under income statement. Because look at it, definitely interest, that is interest expense. We have to subtract it from income statement to arrive at our profit. And now, if we now consider it financing, that is what we call double accounting. We don't want to do double accounting. We don't want to account for interest paid twice. That is cost of financing twice. We don't want to do that. As soon as we have done it in income statement, we don't come back and do it in. So if I say interest paid is financing activities, yes, true or false, what will you tell me?
True.
You come back and you fall into my trap again. you are falling into my trap. Interest expense, interest paid is operating activities.
Yes.
It's operating because we have accounted it there. But
Yes.
the thing that you did not mention is dividend paid. You can see dividend paid, we have not accounted for it. You are talking about the new stock issue. So another thing is dividend. Dividend paid will be a minus. Like that company, they paid a dividend of 7,500 cash. So that would be minus. So now we have plus 5,000 new issue paid minus 7,500. Okay, now the next thing is loan. The company is paying off their long-term loan. And what are they paying off? They're paying 5,000 off. So that would be minus 5,000. Or let me say they're paying 2,000. So because they're paying out that 2,000, that is outflow, that is minus 2,000. So now we are able to see the inflow is plus 5,000. If you are confused, let me know. And cost of financing, I say, is not part of it. Cost of financing is under operating activities. So we don't talk about that. And then we have dividend paid was not accounted for. You can see dividend paid was not accounted for in income statement. We only mention it in appropriation. Appropriation is not an income statement. So dividend paid was 7,500. So you can see minus 7,000, that will lead us to minus 2,500. And then 2,000 loan repayment. Loan repayment is under financing. So minus 2,000. So now we have minus 4,500. Assuming this company took a loan of 10,000. So that would be plus 10,000 now. Loan. 10,000. So in that case, we have a positive plus 5,500 under financing activities. Now we have all our operating activities, investing activities, financing activities. We now add up all of them and net it. Where anyone that is plus, we add it. Anyone that is subtract out of the three, we subtract. Out of operating, investing, and financing activities, I said we don't care about some of them being minus and some of them being plus. Quickly, should not be minus. If it is minus, as a financial analyst, we have to do further analysis to know what is going on. Which activity should be that? Which activities should we expect the cash flow to be always positive? If it is negative, then there is something going wrong. Then as a financial analyst, you have to carry out more analysis and investigation to know what is going on. Which one is that?
The operating one.
Yeah. So you guys know the stuff now. The operating activities. The operating activities, why do we say it cannot be minus? We don't expect it to be minus. Why do we say that? Why do we say it should not be minus? Or let me put it this way. We don't expect it to be minus. But maybe 1 or 2 years, things are not going well, it may be minus. But in the real sense, it cannot be minus permanently, and it cannot be minus year in, year out. So why?
Because they're losing, because they're not covering their liabilities.
Yeah, I know they're losing, but why do we say it cannot be minus? In most cases, it should be plus. Why do we say that? There should be deeper justification why we say, oh, as far as operating activity, it cannot be minus. It must be positive. Why do we say that?
Okay, sir. Hello, sir.
Yeah.
Okay, I think why operating activities sometimes may not be minus is because it's been added to the revenue.
Huh?
In preparing the cash flow, other adjustments are being added. The plus or minus are being taken from the revenue. So most of the time, the amount from the revenue covers other necessary adjustments from all the inflows in operating activities. Because it's, for instance, for instance, in preparing the operating cash flow, I think it's, I mean, we start by profit before tax.
Okay.
So that profit before tax is used for the other adjustment for the inflows and the outflows. It's already been sustained by that profit before tax that has been used.
It was just falling down.
Okay, the main reason I expected you to know is that operating activities of any company, that is the core of their business. They set up the business, and the primary motive of setting up a business is to make profit. And then the core of the operations. And then the core operation, the cash, that is where the main cash should be coming from. Your two activities may be plus or if they buy more assets, more fixed assets, under investing probably will lead to minus. Not worried provided we know why it is minus. We are not worried provided we know why it is plus for investing. For financing, the same thing. We are not worried provided we know why it is positive. Positive because new stock was issued, and new loan obtained. So in that case, if they took a heavy loan and they issued new stocks, that may be positive. We don't really care much, provided we know the reason behind the position being positive or negative for these two. But for operating activities, the core of their business, if it is minus, there is a problem. We want to know where the problem is. So by the time we look at analysis, you know that we talk about DuFont principle, whereby we narrow it to those ratios and see where the problem lies. So that is things about operating activities that we need to know. Okay, so let's look at an example now. Supposing now we have net income. You can write net income 217,000. You can write it. Let's look at this together. Then account receivable increase in account receivable 21,400. Prepaid insurance decrease is 7,700. Depreciation expense Depreciation expense is 64,000. On sale of land, on sale of equipment. Let's put it 5,700. Then we have wages. Wages payable decrease. Decrease is 17,400. Then let's say on earned revenue. On earned revenue is 25,000. Using indirect methods. This is one of the problems I want you to solve. Using the indirect methods, what is the cash flow from operating activities? I will repeat. Net income is 217. That using indirect method, we start with net income. I'm giving you net income 217,000. I want everybody to try. Account has increased 21,400. Prepaid insurance has decreased 7,700. Depreciation expense is 64,000. Gain on sale of equipment is 5,700. Wages has decreased 17,400. On earned revenue has increased 25,400. Then my question is, using indirect method, what is the cash flow, the net cash flow from operating activities? Let everybody try that and give me an answer. Somebody got an answer? Net income is 217,000. Account receivable increased 21,400. Prepaid insurance decreased 7,700. Depreciation expense is 64,000. Gain on sale of equipment is 5,700. Wages in payable decrease 17,400. On earned revenue increased 25,400. What is the net cash flow provided by operating activities?
Can you repeat, sir? What is the decrease?
What is the net cash flow provided by operating activities? Using the indirect method. You want me to repeat the numbers?
Yes, please.
180,000.
Huh?
180,000.
Okay. Let me repeat the numbers. Net income, I wrote it as 217,000. 217,000. Account receivable increased increased by 21,400. Prepaid insurance decreased 7,700. Depreciation expense 64,000. Gain on sale of equipment 5,700. Wages payable decreased 17,400. Unearned revenue increase 25,400. Then the question is, what is the net cash flow provided by operating activities? What is the net cash flow provided by operating activities?
Thank you.
I'll give you 5 minutes or 10 minutes. Anybody with answers? Okay, 5 more minutes or 5 more minutes, I'll be back.
Hello, classmate. Is it direct method or indirect method?
Indirect method.
Thank you.
Yes? Somebody got an answer? That is one of the questions you should expect in your final exams. It's not exactly the same, but if you get this, you'll get the one that I will bring.
I'm not sure if I'm correct, but I got 302,600. 2,600.
600, okay. Anybody with something different? I want at least 3 answers, then we start talking about it, because that is the core of what we are doing now. That is the cash flow. Cash flow. That is the main. If you get this principle, then you know everything about cash flow.
I got 312,000.
312,000. Round?
Yes.
Okay. Anybody else? The last person? I need one more number. Whether right or wrong. When you have different answers, it's good. That will help us learn and know what to do. No other person can give us an answer. So some people are not even attempting it. They're not even part of the class. Can I get the last answer from somebody?
Yes.
Yeah.
Okay. It's 200 and it's 269,200. I made a mistake initially. I've reworked it.
200. Are you the one who gave me the first number?
Yes, I gave you 312,000, but I think it should be.
Okay, so that is not correct, right?
Yes, so I'm taking 269,200.
269,000.
200.
200.
Yeah.
Oh, okay. Okay, you are very close to the answers, but I want you people to get the principle. Yeah, you know, for using the indirect method to calculate the cash flow, the net cash flow provided by operating activities, the first thing you should do, one, you must look at the item that does not involve movement of cash, correct?
Yes.
And write that as non-cash item, because that one should be added back. So in the first place, you look at depreciation is a non-cash item, correct?
Yes.
Okay, so that means I can write on the side of it, since I'm doing exams, or I want to know more. Let me take a good pencil now. I will write beside depreciation non-cash item, non-cash item. That means depreciation is non-cash item. That means it's positive to the net income, correct?
Yes.
So that we should add it. We'll add it. So I put plus beside it. Then the next thing we should be looking at, we have to do adjustment as to the gain and sales of fixed assets. In this case, we have gain of on sale of equipment. So we have gain on sale of equipment. So that means, are we adding or subtracting it from the net income?
We are subtracting.
Very good. So I will say minus. I put minus. Minus. So every thing there is either operating asset items, that is operating item asset or operating item liabilities. Every other thing left. Account receivable, prepaid insurance, wages payable, unearned revenue. These are either liability or asset under operating activities. So first of all, you have to now label which one is current liability, which one is liability, which one is assets. So we have to note that one. So I can look at account receivable increase. Is it an asset or liabilities?
It's a minus. It's a negative minus.
No, but is it account receivable? Forget about the increase now first. Account receivable.
It's an asset.
Is it an asset?
It's an account receivable.
I'll write A on it. Good. I'm going to write A beside it. You see how I'm going? What of prepaid insurance? Insurance.
It's an asset.
It's an asset. I'm going to write A as an asset. That will. Then what of wages payable?
It's liability.
Liability. So I'm going to write L on it beside it. What of unearned revenue? Unearned revenue.
It's a liability.
It's a liability also. So now, you see, the depreciation expense is a positive number, so I put. I will add it back. Gain on sale of assets or equipment. Gain or sale, because it's a gain. When it was a gain, we added it to income, so we are going to subtract it. I'll put minus beside it. The next thing is other things are either asset or liabilities that affected our cash flow under operating activities. So I first of all identified those items that are assets. Account receivable is an asset, current asset. Prepaid insurance is current assets. Then wages payable is current liabilities. Unearned revenue is current liability. Now we get it. The next step now you do is when an asset increase means we have spent money to buy more asset. Right or wrong?
Yes.
When the asset increase, that means you have paid money.
Yes,
so money has
going
been
out.
paid out. So that would be a minus. Okay, now I put minus under account receivable because it has increased. That means we have paid money. Because they took our item on credit, that means we have paid money. Cash flow, cash has gone out. So it's a minus. Prepaid insurance decrease. So that means we have received money back.
Yes.
So that would be positive. Because we received money. It decreased because it's an asset. Because it's an asset, decrease means money has been received. If it is increased, that means money has been spent. So in this case, it's decreased, so it will be positive. So that means money has been received. But in liability, we have two other items in liability. Wages payable decrease. Wages payable decrease means we have paid money to liquidate that liability. So that would be a minus in this case. Unearned revenue has increased. That means we have received more money under unearned revenue. You remember when somebody was to prepay for an item, so that would be positive. So now that we got everything positive, negative for depreciation, I will add depreciation. Gain on assets is minus because it's gain. We added it before, so we subtract now. So minus. Then account receivable has increased. That means we have spent more money to acquire more account receivable. So we have spent more money, so that will be a minus. Then prepaid insurance has decreased. That means we have received part the money back. So that would be a positive. Then wages payable has decreased, a liability item. That means we have paid part of the wages payable. We have paid part of it. So that would be a minus. So now unearned revenue has increased. That means we have received money because it's a liability item. When it is increased, that means we receive money. When it is decreased, that means we are paid money out. Positive. So now we got plus for depreciation, minus for gain of assets, minus for account receivable increase, plus for account prepaid decrease, and wages payable decrease, minus, and unearned revenue increase, positive. So now can we now add and subtract from account net income and see what we get as the net? Can we subtract now and get what is the net? You are 217,000. I'm adding depreciation was 64,000. I'm subtracting 5,700, the gain on sale of fixed asset of equipment, and I'm subtracting also the account receivable 1,400. Okay, I'm adding and I'm subtracting 17,000 wages payable, 17,400, and I'm adding 25,400. So what is the net cash flow provided by operating activities?
It's 322,600.
No, it can't be. If you add depreciation 64,000, you subtract gain on sale of fixed equipment, and then you subtract account receivable increase 21,400. You add prepaid insurance decrease. You add it. Then you subtract wages payable decrease 17,400. You add unearned revenue increase 25,400. So what do we get?
269,200.
No, I didn't get that.
269,600.
Correct. That is what I got. 269,600. The principal.
Where is the additional 200 coming from? Because we are having 7 and 400 as well.
But 64,000 you add. Okay, let me give you the number.
Okay.
Clear your calculator. 217,000. 217,000. Have you done that?
Yes, sir.
Add depreciation back 64,000.
Okay.
Gain on sale of fixed assets, subtract 5,700.
Okay.
Then account receivable increase, subtract 21,400.
Okay.
Prepaid insurance decrease, add 7,700.
Okay.
Wages payable decrease, subtract 17,400.
Okay.
Then the unearned revenue increase at 25,400.
25,400.
Yeah,
Is it
25,400.
Professor, it should be 269, 69 and 200, not 600.
Huh?
It should be 269,000 and 200, not 600.
200.
No, it's
I
600,
got 600
Nuran.
myself.
200
It's
actually.
600.
I'm
No,
using the
it's
financial
600.
calculator, so it is
Okay,
too
but
easy.
yes, but sir, you told us the 25,000. Is it 25,400? Well, that is really. Is it 25,000?
Unearned revenue. So add that.
Sorry, sir. The unearned revenue, say it's how much?
25,400.
Okay, if it is 400, then it's 6. Yes, it will be a correct is 600. But in my calculation, I
But
wrote
I've been giving that numbers.
I wrote 25,000. I
Huh?
didn't see the 4. Yes, I wrote 25,000. I didn't see 400 at the back.
Okay, now you got it.
Yes.
Is there anybody with different answer?
Sorry, Professor. So the in-end revenue was 25,400.
Yes. Unearned
Okay.
revenue is 25,400. Yes.
Okay.
What I used was for the net income, I used 270. I thought it was 270, not 17. That's why I got into
Okay,
that calculation.
217, 217.
I get it now. I get it
Okay,
now.
maybe that's why you got it. Oh, very good. So now, in principle, when an item of current liability increase and decrease, we have to know the implication of that to cash flow. If it's liabilities, when liability increase means more money has come into the company, plus, right? For example, if loan has increased, that means the company has taken new loans. That will increase the cash flow. And when you see the loan decrease or account payable decrease, that means the company has paid money out to liquidate that loan. So the effect on cash flow is that principle. First of all, identify whether it is asset, because asset acts in opposite direction to liability. Liability increase means money has been paid out. And liability decrease, increase, or increase means money has come in. But for asset, when asset increase, that means money has been paid out. When asset decrease, that means the other way around. Did I make myself clear on this cash flow?
Yes, sir.
Okay. So read generally, review our generally, so that some of the theoretical questions, those are the practical questions I will ask. Those are the practical questions I will ask. So read generally to be able to get it. I don't know, will they say we should not continue because maybe we have 5 minutes because let me see. So read generally for cash flow. Those are the key questions, but when you read the theories, everything, you'll be able to answer all the true false questions correctly. But the calculations are the ones I've just looked at. And I want you to look at that. Okay, so let's quickly, maybe 2 minutes, 3 minutes. For the chapter 13, what is expected of you is what we have done also. We have done most of the ratios. Profitability ratio, should know how to calculate it. Market ratios, we are part of those things. So I expect you to be able to know those ratios. So how to calculate those ratios, I don't expect you to prepare a report. I'm not going to read reports because we don't have a system whereby we can get those reports written. That report writing should be a project, which we did not. So instead, we follow the quiz and so forth. So I'm not going to go through that chapter. What you should note, about that chapter is those ratios that have been indicated. Make sure you know all those ratios. We have done all those ratios from profitability ratios up to market ratio. So you're able to know how to calculate those ratios. Any ratio you have issue on how to interpret this, you can consult me. So that will be the end, where we'll end, and I wish you all the best. Most of those questions that you should expect in your final exam, we have discussed it. The practical aspect of it, those things I expect you to calculate, we have done the calculations. So so that means we have 4 chapters to focus on the final exams. The questions that involve calculations, we have done it here. You should not expect the exact questions the way it is. Say, okay, oh, this one, he gave us depreciation to be 64,000. It will be exactly 64,000. No. Or different, but they are the same principle. You have, definitely you have depreciation for you to adjust. I don't want to tell you again, but you know, you have to add. Now I brought in gain on sale of equipment. Definitely also you should know that probably what the professor will bring will be loss of equipment. Since I brought gain, I may bring the same gain. I can bring loss. I'm giving an example. So if you are able to get those ratios we have done from chapter 9 all through, and then profitability ratios, then you should be able to be good. So those are the things I want you to know, take note of. Any questions about the exam? I will let your university know, because I wanted us to do the exam one day, but I think I may run into problems where some people will not appear for the exam, or some people will have issues not finishing, and that will extend beyond Sunday. I want Sunday, as soon as we get to Sunday, you are almost getting your grade. By Monday, I should be able to say the grade is, we have all grades ready. By that time, everybody must have finished the exam as a Sunday. So Thursday, I will open up for you to take the test, the final exam. Then by Sunday, I'll wait for everybody to finish. By Sunday, I will compile the results and then compute the grade. Any question?
Sir.
Yes.
Hello, sir. Yes, sir. Yes, sir. My question is the assignments that you've given before. Yes, sir. I told you, I complained last time that I couldn't take the test that you sent. You reset the last quiz that about 2 or 3 attempts, but I couldn't take it. And you said you open it again.
Did I open it for you? I opened it, no. But you didn't want to take it.
Professor, I didn't know the date, the time you opened it.
I want to give everybody equal this thing. I will open it up again, but I opened it, but you didn't take the test. I opened it for 1 full week. I said, go and take the test. You didn't take it. I will open it because I want you to have a grade on it so that we compile the grade. But if you don't take it, when I open it this time, if you don't take it, that will be a 0 for the test. For the, okay. Is that quiz 2 or 1?
Quiz 2. That's for quiz 2.
Okay,
sir.
Quiz 2. I will open it. Is there anybody who have not done quiz 1?
I've
so
not
everybody
done
have done quiz 1.
I've not done my assignment 1. The assignment 1, that was that time I complained that the
assignment 1.
Yeah. I've done it.
Yes, I've done. So I'm going to start compiling the points.
Okay, so how would I submit it, sir?
Submit the assignment. You don't have, is the module not available for you to submit?
The module is not opening for assignment 1. Then
okay, I will go and open it. I will open it. Is there anybody who have any issue about any assignment, quiz, or quiz 1 or 2?
assignment. Sir, sorry, sir. That my own is too much, sir. Sir, the assignment 4, there is no requirement. The what I saw, there are space. You see requirement 2, 3, 4, 5, but I didn't get the question that is required to solve that. So I left that place vacant, and I didn't know, because that period I was actually having activities in the village. I lost someone, so I was not actually present when you talked to that. But when I came in to solve it, but I can't find the requirement on that inventory stuff.
Okay, do the assignment 4 don't carry more than maybe, I don't think it carry more than maybe 5 points. It may not even affect your grade. So if assignment 4 is the one you have not done, then you don't have any problem. We will see how we can do that. Either I give you extra assignment because I cannot even look at their assignment again. I give you something extra to do for assignment 4.
Okay.
But the most important one is quiz 1, quiz 2. All the assignment you have done so far will carry just 100 points. So I think so. So the quiz 1 and 2 will carry 100 points. So if you don't do any of those, then there is no way you will do well on the course. So you have to do the 2 quizzes and then do the final. You don't do the final, there is no way you will pass the course, because the minimum expected by the university policy is 220 points to pass the course. If you don't get 220, you can't pass. If you get 200, over 200, and you don't take the final, you can't pass the course. You see how it is? So you have to make sure you do quiz 1 and 2 and the final exams.
Okay, so sir, when likely will you open the quiz for the quiz 2?
When we finish now, I'm going to open, because we don't have time again. I'm going to open quiz 1 up to Wednesday, because Thursday, I don't want you to have quiz 2 and final exam to start taking. When Thursday, I will open quiz, the final exams. So quiz 1, I'm going to open it right away now before we go. And then you are expected to go through it between now and Wednesday. On Thursday, you only see the final exams.
Sir, my only issue is not quiz 1, it's quiz 2.
Oh, quiz 2. Sorry, nobody has issue with quiz 2. I've taken note of that. I'm going to open quiz 2 up for you.
Yes.
Okay, I'm going to open quiz 2 up for you, and I give you up to Wednesday. Let me write it before I go and open quiz 1.
Okay. Then
so
assignment
quiz
1.
2. Quiz 2.
Assignment 1.
Assignment 1, I will send you was, if I cannot
assignment
get you
4. No. Assignment 1.
Assignment
4.
what?
Assignment 1. Then I couldn't submit because of the Excel format. Then assignment 4, the one you say you will give me another thing, is assignment 4.
Okay. We'll take care of assignment 4. Assignment 1, I open the format up and I say you can accept any format. So
yes,
you did not check, it seems. So I remember assignment 1, I opened the format. I restricted the format, but I now open it up. You can submit using any format. So go through that and you should be able to be good. So but make sure you do your quiz 2, do your final exam for you to pass the course. Without quiz 2 and final exam, there is no way you will pass the course.
Okay, sir. I will do that.
All right. Okay. Good luck. I will try. I know I'm not an. It was very much a WhatsApp person, but this week I will try as much as possible to be having my eye on the WhatsApp. Yeah, because I don't keep my phone with me most of the time. I keep it away when I'm dealing with classes and some issues. but for you, because you are the only one I have a final exam this week, I will make sure I keep my WhatsApp open. You have any question, please ask. Any question about the exam, please ask. I will respond within 24 hours for this week. I will make sure I keep my WhatsApp beside me. For quiz number 2, I'm going to open it up to Wednesday.
Okay, sir.
Open it up to Wednesday. Quiz number 2 up to Wednesday. So I'm going to open it now. And if you check it, you will see it when I open it, when I leave this class now. Okay. All right. So good luck. And maybe we meet again. That has been a good class. I like the class myself. I enjoy the class now. Maybe towards the end, that I now enjoy the class so much. So thank you so much, and feel free to contact me on your grade. If your grade is calculated and you have a number that is different from mine, please contact me through WhatsApp. I will answer it. I don't think we will meet again on next Sunday, but the most important thing will be the grade. So we will be discussing the grades as soon as we finish the exams. If you have any grade issue, please, WhatsApp is there to consult me. All right, thank you, and goodbye, good luck.
Thank you, sir.
Thank you,
Thank you very
Professor.
much.
Thank you. All right, thank you very much.